National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is the closing edition of Market Today, where we will help you understand all the market cues in the last half an hour of trade and what should your strategies be as we continue to maneuver the US, Israel, Iran war crisis and how it has hit the D Street and the global market sentiment and has brought back the risk of sentiment on the financial sector as well. What we will also try to decode on this special edition is the kind of portfolio that you need to build as a resilience to any of these war-related uncertainties that are grappling the world right now. We will also be focusing on the key stocks that you must be aware of that have larger than the other stocks exposure to the Middle East, to the war-affected areas, and those stocks should be on your radar to find out what exactly should your strategies be on those as well. Let's quickly look at how the markets are shaping up. We pulled up from the day's low point for sure, but still are down by about 340 odd points. There's extreme amount of volatility in the markets, 24,832 right now on the Nifty. The India VIX is now up 25% in trade right now at 17 odd levels. There's been a sharp spike on the India VIX levels. There is a glimmer of hope on the metal stocks right now. Some buying returning after the whole days of uncertainty and negative moves, but infra stocks are down by 2.3%, largely led by L&T and many other stocks that have exposure to Middle East. Auto stocks are down by 2.2%, oil and gas down by 2.2%, PSU banks down by nearly 2%, broader markets hit by 1.8% as well. On the Nifty, you just have about 6 to 7 stocks holding up, but all the rest of the stocks have all slipped. BEL is your top mover, HindalCo, ONGC, Sun Pharma, Dr. Reddy's, Cipla. These are the stocks that are holding up in trade. The ones that have dragged, IndiGo, 6.5% lower. Aviation stocks clearly being hit with number of cancellations and of course that denting the sentiments and later on being penciled in into the quarterly earnings as well. L&T, Adani Ports, Maruti, these are all the stocks down by anywhere between 3 to 5 odd percent. But let's welcome our guest on board. We are now joined by Mr. Sudip Bandyopadhyay, the Group Chairman of Inditrade Capital, to share with us his views on the markets. Warm welcome to you, Mr. Bandyopadhyay. Good to have you with us. We're starting off wholly with all this geopolitical war news, and that's somehow casting a shadow over good spirits into the markets. What exactly is your thought process? We have seen a number of wars over the last couple of years. Last 4 years, it started off with Russia, Ukraine, went on the other Middle Eastern countries. We also had India-Pakistan war, and now we have Middle East in the thick of action, West Asia, being in the thick of action of war. So the geopolitical tensions continue to grow. And, the investors are therefore left directionless. They are unable to find out as to what exactly should their approach be in such a case. What are you advising?
Well, I think you're absolutely right. Last few years, we have seen too many conflicts. I would say full-scale war, conflicts at least. But I think the one currently we are witnessing in West Asia has the potential to destabilize the economies of multiple countries, including India. So we have to take this, kind of disturbance with a lot of seriousness. Look, India is, dependent on imported oil, and significant part of it comes from West Asia and through the Strait of Hormuz, which all are disturbed in a big way, and the oil prices have already shot up. And if the disturbance continues for, let's say, 3-4 weeks, as the US president has predicted sometimes earlier today, I think oil prices will probably go up even further in spite of OPEC announcing incremental production, this not being the peak season for demand, and China and other countries having significant inventory. I think if this conflict continues for 3-4 weeks, prices will shoot up, and that will have the potential to significantly adversely impact Indian economy and Indian companies. So we have to take this very, very seriously. This can have a significant lasting impact on India. Yes, we are not directly involved. We have nothing to do with this particular conflict, but we are indirectly being hit because of our dependence on imported oil to run our economy. I think that's where we are, and we have to be extremely careful. Normally, historically, it has been seen that when the war starts, the share prices across the world fall, and this can be treated as an opportunity for accumulating good quality stocks at lower valuation, so that when the war stops, by the time war stops, market will start going up again, and you probably will benefit if you are buying into stocks now. But still, in spite of that common wisdom, I would say that it's better to wait and watch a little more. Things are not yet, kind of looking to have been resolved. Iran is retaliating in a big way by hitting a lot of, US allies. So we have to wait and watch. There are sectors, there are stocks, there are pockets which are good and definitely can be looked at.
Right. Mr. Bandyopadhyay, I think a lot of viewers would want to know if these geopolitical tensions are to continue, then how does one really war-proof their portfolio? Is there such a thing? Can you do can you make a war-proof portfolio? Or, what is exactly the best way to hedge your portfolio from such concerns?
Well, I think at this stage, Indian investors and global investors are facing multiple issues. We have been talking till about a few days back how to make your portfolio AI proof, how to make your portfolio, tariff proof, Trump tariff proof. Now we have another challenge. You have to make it war proof. So if you really ask me, you have to try and make your portfolio war proof, Trump tariff proof, as well as AI proof. Now that's a very tall ask, but I'll still attempt it. I think there are few sectors which I strongly believe are looking good and has the potential to reward the investor handsomely going forward. One is the metal sector. I think there is absolutely no doubt, no war. There is significant emphasis on defense production and industrial production, both in India and multiple parts of the world. And that has created significant incremental demand for metals, and metal companies are having a structurally good period. So one should look at metal companies from a long-term perspective. The other sector, which again I've been bullish for some time, has been chemical, agrochemical, and specialty chemical. Now, this sector, the logic as far as India is concerned, China +1, continues to remain strong. The green shoots in their quarterly performance is clearly visible, and the settlement or some kind of resolution of the trade war with the US and the signing of trade agreement with EU and multiple other geographies definitely helps these companies, because a significant part of their production does get exported to these geographies. So this is another sector which one can look at. The third sector which I will say one can look at is BFSI. I think again BFSI has been doing pretty well. Banks, particularly PSU banks, there is still valuation gap with private sector peers, and they are definitely worth picking up from a long-term perspective. Look, the war will stop. It's a matter of time, whether it stops in 1 week or 2 weeks or 3 weeks. If it goes on till 2-3 weeks, it's bad and bad enough to derail the economy for some time. But the war will stop, and once the war stops, I think these are the sectors and these are the stocks, these are the pockets which one needs to look at.
So any key stock ideas from these sectors that you've marked out, sir? What kind of stocks can one safely invest in even right now?
Well, I I do like Vedanta, and I think I mentioned earlier in your program. I think they have a great play in multiple metals, aluminium, which is in a secular bull run with prices hitting all-time highs. We expect this to continue for a couple of years, and Vedanta derives roughly 50% of its EBITDA from aluminium business. So this is good time for Vedanta. They also have a zinc subsidiary, which is the only producer of silver in India. And we know what's happening with silver as well as zinc. So again, that's good for Vedanta. On top of all this, and apart from the fact that they have exposure in multiple other metals and commodities, they also have an oil business. Erstwhile Kane India was acquired by Vedanta. So that business, with this destabilization in West Asia, should become more attractive. And remember, the company is going through a restructuring whereby there will be 5 companies created out of Vedanta now, and value unlocking will happen from a shareholder's perspective. So Vedanta definitely. As far as chemical agrochemical segment is concerned, the UPL has been our favorite. Now UPL is one of the largest companies in that particular space. They are doing a restructuring whereby the crop protection business is going to get listed separately in US. This will streamline the structure and the entire company in a big way. Of course, the potential for this sector we just talked about, and we believe the good times are coming. So UPL can again be looked at from a long-term perspective.
Okay, Vedanta, UPL, these are the kind of stocks you could definitely be looking at, sustainably to continue to grow in your portfolio without getting much impacted at this point in time. Let's also come to the key sectors and the stocks that are getting impacted and to try to understand what should be the approach now, Mr. Bandyopadhyay. So, the first sector that is clearly getting impacted is the oil and gas sector, because we've seen the crude oil prices spike above $80. There are several brokerage houses that are penciling in a scenario of in case the war goes on for about a week, 10 days, there could be another $10 kind of a spike, and it could also test $100. That's also not being ruled out, at least at this point in time. And for India being an oil importing nation, again, this is going to be an aspect that we need to consider with respect to the current account deficit that gets impacted. Now, the key question is upstream companies are benefiting, but clearly the downstream oil and even gas related stocks, should one completely stay away from them?
Well, at this stage, it is very difficult to take a call on these companies. The users of oil and oil-related products, they will definitely suffer. Whether it's an aviation industry where ATF prices have shot up and will keep shooting up if the global oil prices are up. The paint industry, which uses oil in a big way, and I can keep naming, tires, automobiles. See, all of these are getting affected because of this sudden spurting oil prices. And if this continues, obviously they will get impacted, and we have to be careful. As far as specifically oil producers, oil marketers are concerned, I think some of them will get the benefit of pass-through, and they will benefit when the oil prices go up, particularly the oil producers. So it's an ONGC or Oil India. They will indirectly benefit. Not sure how much of the benefit can be retained by them, because the government has the bulk prices at the retail level is decided to a great extent by the government, and the subsidy burden is shared between the producers as well as the marketers. So we have to see how much they can retain. So it's very difficult call to take, but it's better to avoid these volatile sectors at this stage.
What about the export-oriented sector, sir? How would you look at that? We've seen how rice exporters today have been badly hit in the trade today, double-digit losses for across this space. Others also, chemical exports, some such sectors are also facing an issue. How would you really look at those export-oriented names at this point?
See, some of these exporters who have a significant export to West Asia, like you talked about rice export, significant exports they have to West Asia and Iran. So obviously this kind of uncertainty and war definitely affects their business. So you have to be careful and away from these counters. And
Okay.
the market is also, giving that indication. But some of the other export stores, particularly textiles and others, I think they should not have too much of a problem. Disturbance definitely affects everybody, but I think by and large they should be okay with this. Trade agreements getting signed with UK and eventually USA. I think that the textile exporters, aqua exporters, gems and jewelry, I think all these guys should continue to benefit from the trade deals which are being signed.
Yeah. Okay, in fact, when we're talking about the trade and the exporters and how are they really looking at the current West Asia crisis, this has definitely put India's key trade routes also under pressure. It's also disrupting air cargo, even shipping movement as well. And we are given to understand that the Commerce Ministry is also reviewing the situation at this point in time, as freight rates and transit timelines also are uncertain at this point. Karishma Sudani, my colleague, is now joining in to share with us what really is the latest update, what is the ministry's focus right now, and what are the concerns that are being raised by the traders community at this point in time. Karishma.
Thank you, Sakshi. As we speak, there is a meeting that is being convened at India's Trade Ministry, and while you were just discussing about the sectors that are highly going to be impacted, the bigger challenge and problem is with the key routes, and this is especially the fact that most of our routes, the trade routes that India connects to Gulf or North America or Europe is via actually the Gulf, and with the Gulf being shut down currently because of the attacks, it is going to be very difficult for us to reroute in matter of days and in matter of hours. And if we have to take a few days to do this, it's only going to add extra to our costs in terms of insurance premiums and freight charges. Now, of course, Strait of Hormuz is something that by default is going to be the crux of the conflict, and the government sources have hinted us that they are trying to keep an eye out to ensure that at least alternate sources in a matter of few hours could be arranged or explored in order to ensure that there is some movement of trade going on. This is not the first time that exporters are taking a hit. Last few months have not been good for them. Just a couple of days ago, there was a happy news on the table with the US putting a 10% global tariff, but looks like we are back on the crisis table now, and sources have also hinted that they are analyzing the Cape of Good Hope route, but that will take an extra hit off in terms of charges that a lot of exporters will have to bear.
Okay, thanks a lot, Karishma, for getting us all of those details, and we will continue to look at this aspect and see how things progress from here. Of course, it's a developing situation, and we will have to watch out for each day to find out what exactly is the situation. Thanks a lot for getting us all those details. Sudip, coming back to you, to try and understand what are the other sectors that are going to be facing the brunt. We've been seeing aviation continue to be a sector that's been hit. We've seen how IndiGo SpiceJet prices have crashed in today's trading session. About 1,000 flights getting cancelled initially in the last couple of days itself, and the stock continues to reel under pressure, 6% lower in trade. And how would you really look at the aviation space? This has been a stock which has been a winning stock in everybody's portfolios for many years, but suddenly last couple of years it's become a pain point as well. So how should one be really looking at it?
Well, at this stage, of course, it's a very, very dicey bet to take. Look, you talked about flight cancellations, route disruptions. Of course, that's a big issue. But beyond that, I think you have to also factor in that global oil prices shooting up directly hits their profitability, because the aviation turbine fuel prices go up, and ATF cost is about close to 40% of the operational cost of an airline. So you can understand, if your 40% cost component goes up by 10-20%, your profitability really gets severely affected. So at this stage, I think it's extremely difficult to take a call on these aviation stocks, and pretty much that's the reason why these stocks have corrected. But again, I mean, if you look at it from a slightly different angle, that if you want to take a bet that this conflict will get resolved within the next few days, then maybe this is a great price to buy, because
Okay.
all the negatives are factored in at current levels.
That's an interesting take also. Okay, so one should definitely be looking at those dips as well. Let's talk about some of the other key sectors too. What about, the consumer space, the pharma space as well? How are you looking at these key sectors? Is this also going to be, seeing some kind of pain for some time? Or would you say again buy on dips will work for some of these sectors?
These sectors buy on dips will work because look, I think if you look at the FMCG companies, post sharp correction today morning, they have recovered quite a bit, whether it's an HUL or a ITC or overall FMCG index. Things have recovered because look, they won't be directly impacted. Indian economy is not directly impacted. Consumption has been going up. The quarterly performance of these companies have been improving. So, if this is only a temporary disruption and temporary disturbance, then of course these companies will continue to grow and prosper. Q4 is expected to be much better than Q3. So, FMCG definitely. As far as pharma is concerned, the dynamics are completely different. I don't think they will get impacted negatively by this war which is happening in West Asia. Some logistic disruption, some cost increase on exports may happen, but that is not going to move the needle. The dynamics of the industry will determine their fate. We do like domestic focused pharma companies. Mankind Pharma has been our preferred pick for quite some time, and we will continue to maintain that.
Okay. Defense. That's one sector that always we see emerges as a winner in the geopolitical scenarios. We've seen that happen over the last couple of years as well. We've been seeing increased focus of the government, order flows coming in, a lot of focus on Make in India, sourcing from within India as well going strong. How are you really looking at the defense sector? Of course, it's from its all-time high levels, it's fallen, but from its low levels, it just picked up a bit, but still far away from all-time high levels. How would you really look at it?
I agree with you. Most of the stocks have fallen quite a bit from all-time high levels, except probably BEL, Bharat Electronics Limited. All of the stocks are down 20-30% from all-time high levels. If I have to pick up some of the defense stocks at current level, and the logic of picking up, you're absolutely right. I think all this war and conflicts increase the importance of defense manufacturing locally, and that's pretty much what is happening. And Government of India is clearly focused on defense make in India, and that's yielding good results. But beyond the public sector undertakings, where the valuation have reached a certain level, which it's not very comfortable considering the financial dynamics and the delivery track record, unfortunately. So I would rather focus on the private sector players and some of the emerging big private sector players like Bharat Forge. Now they have a small defense business which they are growing rapidly. They are getting orders from regularly they have started getting orders from multiple government departments, and I strongly believe that Bharat Forge is in a good position to ramp up its defense business and take the benefit of defense make in India. I also do like Larsen and Toubro, but remember, LNT has a big business in West Asia.
Yeah, that's what I was coming to.
That's why it's being pounded today. But having said that, if the bet is that this war is going to stop soon, then I think LNT is a great buy today after the correction of about 200 plus rupees, which we have seen today in the stock.
Okay, L&T is a good buy after a 200 rupee correction, a 5% loss. This is despite the fact that 7.33 lakh crore rupees of an order book for L&T comes in from the Middle East, so it almost accounts 37%. But at this point in time, these dips can be considered as good buying opportunities for these construction majors as well. Apart from this, is there any other sector that we must definitely focus on which can help us? Maybe gold and silver and gold finances, what would you want to say on that? Do you think that again can be seen as a buying opportunity?
Yeah, gold finance, gold loan companies are definitely the flavor of the season. They are doing well and the business is robust. It's growing rapidly. It's growing at a much better pace than all other types of lending. And the regulator also is comfortable with this secured lending. The regulations have stabilized. So yes, gold loan companies do look good, and Muthoot, Manappuram both do look good. Valuation comfort is there in Manappuram at this stage, and the transaction which there was Bain Capital was entering Manappuram as a co-promoter. That transaction also has got the regulatory green light. So Manappuram should be a buy at current level. That's what we believe from a gold loan perspective. It doesn't. I don't mean that Muthoot has any problem, but just that valuation and the upside potential probably is more in Manappuram at current levels. One can look at the insurance companies as well, because insurance is an integral part of growth, and this kind of destabilization war increases the importance of insurance. So I would say insurance from an India perspective, domestic perspective also makes tremendous sense. Both life and general insurance businesses are doing good and would continue to do good. So you can pick up some of the good insurance companies. We do like LIC for that matter. The valuation comfort there is significant at current level, and one can pick up LIC from a long-term perspective.
Okay, thank you so much then, Mr. Bandyopadhyay, for being with us on the program and for giving us an insight on the overall situation and helping us maneuver through this crisis at hand, which is impacting a lot of retail investors' portfolios too. Thank you so much for being with us. All right, viewers, we'll wrap it up on that note. It's 3:30. Let's look at the market winding up. 328 points lower. We end at 24,850. The good part is that from the low point of the day, we managed to pull up quite a bit, almost nearing the high point that we saw during the session, but 1% lower even for the Nifty Bank. Most of the sectors have ended lower. Pharma and metals managed to see some green on the screen by the end of the session today, which seems that there is some buying that could happen at these dips at this point in time. Of course, IndiGo continues to lose 6%, L&T down by 5%, Adani Ports down by 4%, Maruti down by 3%, Asian Paints also down, crude derivative there, that's also lower. But BEL continued to move up. HindalCo, Sun Pharma, ITC, these are the gainers. ONGC, Cipla, Dr. Reddy, some of these pharma names they pulled up, metal names pulled up in trade. HAL, BEL, by the way, both have managed to end into the green. ONGC, Oil India upstream companies have both managed to end into the green as well. Within the broader markets, although the names are few, but Tejas Networks higher in trade. Quality Walls is higher, about 7%. Idea Forge Technologies, that's the supplier of drones, is higher in trade as well. Paras Defense is up by 5% as well. Swan Defense is up. So this entire defense portfolio seems to be shining in trade. You're looking at some of the other names like Sterlite Technologies that's moved up as well. Those are the broad market names that managed to pull up in an otherwise sentiment that has been badly hit because of the geopolitical tensions. We leave you at that, but remember, tomorrow is a stock market holiday on account of Holi. So here's wishing everybody a fantastic Holi. May this year turn out to be brighter than before, more colorful than before, and may the brightness of these holy colors come back and spread all the joys onto the street as well. Thank you so much for joining us.
Presented by National Stock Exchange.
Look, this investment Guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Abha Bakaya,